Hey guys, Tony here. If you are one of those people that is struggling to have a portfolio full of stocks which are going up, if you're stuck with a portfolio of everything in the red, you don't know where to start on researching stocks or how to pick what are potential winners. Maybe you're good at picking winners, but you're bad at knowing when to sell and you're constantly leaving gains on the table and then the stock comes plummeting back down. If any of those scenarios sound painfully too familiar, this video might be for you. There are all types of different traders: day traders, momentum traders, swing traders, speculative traders, short squeeze traders, options traders. And then there are those of us that are looking to have a portfolio mostly full of blue chip companies that do nothing but go up, where we can sleep at night. Yeah, they don't always go up, but you know what I mean. You want to have more winners than losers in your portfolio over the long term. So I want to go over with you in this video a system which I've been using since the 1990s. It is called the CANSLIM System. I'm going to go over the system with you at a very high level just to give you a broad overview and maybe whet your appetite into broadening your own education. My hope is that watching this video kicks off your interest in developing your own education in how to properly pick stocks. So if that sounds like it might be of interest to you, let's get right into it. I don't think that there is anybody investing in the stock market that would disagree with the statement that I have on the screen. For most of us, our long-term goal is to compound profits, to grow our portfolio. But all too often I talk to people who are stuck with a portfolio where all they're trying to do is recoup losses. And for those of you that are stuck in that category, I think that you will get a lot of value out of watching today's video. One of the first things that I want to get you guys in the mindset of as you develop your long-term career in investing is, before you buy a stock, I want you to have a plan on selling it. And I want your sell plans to be realistic. As the quote says up on the screen, buying a stock without knowing when or why you should sell it is like buying a car with no brakes, or being in a boat with no life preserver, or taking flying lessons that teach you how to take off but not know how to land. You must have a sell plan in place before you buy a stock, and that sell plan should be grounded in reality so that you can get out of the play while you are still profitable. In this video, we're going to be talking about CANSLIM, a strategy that was developed by William J. O'Neill, the founder of Investors Business Daily, an excellent trade newspaper if you are an investor. And I also recommend that you buy his book. I will put a link to it in the video description because there is way more in the CANSLIM system than I can go over with you in a video that is only a couple minutes long. So in today's video, we're just going to talk about the highlights, and I encourage you to do more reading and research on this topic yourself. Even if you pick up 1/10 of what is in that book, it will develop a foundational understanding of what to look for in stocks before you buy them, after you buy them, and when to sell them, and improve your investing success tremendously. CANSLIM is a 7-letter acronym for 7 different fundamentals, or 7 different things that we look for in stocks when we are trying to pick winners, and hopefully pick them right before they break out into a upward trend. Like all systems and strategies, this one requires that you learn how to use it and when to use it. And CANSLIM is a combination of both fundamental analysis and technical analysis. Let's go through some of the highlights here really quickly. The first 2 letters are near and dear to my heart. You guys hear me talk about it often. Earnings. They have to do with earnings. Is the company profitable? Is it consistently racking up positive earnings? The C stands for current quarterly earnings per share, having increased significantly from the same quarter in the previous year. A also has to do with earnings. When we look at earnings for the year, annual earnings have increased over the last 3 to 5 years. The N stands for new products, management, or positive events that may push the company's stock to new highs, what we often refer to as a catalyst. The next 3 letters of CANSLIM, S, L, and I, have to do with institutional support. Yes, believe it or not, institutions out there, mutual funds, big institutions with big money, they are the ones that drive the leading stocks higher and higher to new highs, sometimes doubling these stocks in a year or two. And you want to be riding the wave of these big institutions that are pushing these stocks up and then taking your exit. So let's talk about these 3 letters here real quick. S has to do with supply and demand, or scarcity. Scarce supply combined with strong demand for a stock. When we're looking at the S, we're looking at changes in volume, indicating increases in demand, especially if they're unexpected. We're looking at the float. Sometimes lower float stocks have scarcity. And we are looking at general supply and demand by looking at things like accumulation and distribution. When we look at L in CANSLIM, we're looking for leaders in their segments, leaders over laggards. Institutions are going to be getting on board with companies that are leaders in their business segment, and they're going to be fleeing, selling, driving the price down companies that are laggards in their industry segment. You don't want to be riding that wave down. You want to be riding the wave up with the big boys. I stands for institutional sponsorship, and what we mean by that is, are the number of institutions which are owning this company's stock increasing? And there are tools out there that you can use to determine if the number of institutions that own a company's stock is increasing quarter over quarter. Are institutions getting behind this stock? If they are, that is one that is likely to continue going up. Your job is to recognize it early and get on that wave early. The final letter, M, has to do with market direction. History shows that 3 of 4 stocks simply follow the direction of the general market. Learn to follow the current trend, not fight it. This means you need to keep up with general economic news and the trends of the indexes so that you know if you are getting at the point where there is risk of a market downturn. If a market downturn is beginning, you want to start taking defensive action to protect your portfolio. The next thing that we're going to talk about at a very high level is a buying checklist. Do you have one for stocks that you buy, or are you just going off of what people are recommending on social media and doing absolutely zero research? You're just buying it because it's popular. I'm going to encourage you, before you hit that buy button, take some time, look at the financials, have a strategy, have a plan, have a buying checklist before you buy a stock. The first thing to know is the market in a general uptrend or downtrend? And you can go to investors.com. That's where this screenshot is from. And they give you a daily update. Is the market in a uptrend or downtrend? I have circled here what I want you to be looking for. This is from this week. The market is in a confirmed uptrend. The S&P 500 and NASDAQs climb to record highs. Raise exposure to 80 to 100%. See latest market analysis. Investors.com is a great tool if you guys aren't using it. The next part of your buying checklist after you make sure that you're in a market uptrend is to look at the fundamentals of the stock using a tool like stockanalysis.com, or you can go to investors.com. I want you to look at the financial statements. Yeah, imagine that. Look at the financial statements. Do you have a strong company? Do they have revenue? I hope you're investing in companies that aren't zero revenue companies. I know some of y'all like to buy those, but look for companies with revenue, but more importantly, with companies that have earnings and a trend of increasing earnings over multiple quarters or ideally multiple years. We want to see accelerating earnings growth and accelerating sales growth. If you're investing in companies that have declining sales, you might be looking at a problematic company. I want you to look at things like return on equity. You can look that up on any number of sites. Is the company properly utilizing the cash on their balance sheet? Is their balance sheet in order? Return on equity is going to tell you that. We're going to ideally be looking for companies with a ROE of 17% or higher. If you pull up a company on investors.com using their search function, it will give you all of this stuff in a easy to review visual format. The last thing in our buying checklist is to do a little bit of checking if institutions are supporting this stock. We're looking for an accumulation distribution rating, ideally of A, but we'll take a B or a C, relative strength rating of 80 or higher, share price above $15, and an average daily volume of 400,000 or more. Now, we've talked a lot about fundamentals. I did say in the beginning of this video that there is some technical analysis that is involved in the CANSLIM system. So you will need to learn to read charts and identify support and resistance lines to properly know what is the right time to buy these stocks. Because these are more long-term trades, the typical support and resistance lines that we're looking at are the 50 and the 200 moving average. As stocks trade around support or resistance lines, there could be important signals for you to buy or to sell and wait to see if there's a pullback. And there are certain chart patterns that you're going to need to learn how to read. It is covered in the book, or if you are already good at technical analysis, you have a leg up in understanding how to do this part of the CANSLIM system. Because this is more long-term investing, we're typically looking at daily and weekly charts, not 1 minute and 5 minute or even hourly charts. We're not trying to identify day trade or swing trades here. We're looking for stocks to buy for momentum over a little bit longer term. So if you're a day trader or a swing trader, keep that in mind. We're not quite talking about those type of trades in this video. All right, enough on the buying overview. You could literally spend weeks learning everything that is in the book, and I recommend that you buy the book. There is a link to it in the video description. Now let's go over some of the selling checklist though. And this is, I think, for a lot of people, a big problem, knowing when to sell. The most important sell rule though is to buy at the right time. You guys always hear me talking about being a bottom feeder. I'm constantly looking at charts in my free time, drawing support lines down to where I would be willing to buy that stock, where it's a good value buy. And sometimes I have to wait 6 months or a year for a stock to finally get down to that point. But getting that right buy is your first important step. The other common problem that people make when thinking about when to sell is they are always looking for a home run. And I want you guys, especially if you are a beginner, to get in the habit of being willing to take singles and doubles. If you're able to hit singles and doubles consistently, you're going to far outperform those people that are trying to make a home run on every single one of their stocks. Before we go over the couple of selling rules, I wanted to show you a couple charts here. I've got Disney and Google up on the screen. You think of these big companies as only ever going up, but even leading companies peak and they come back down. You want to be able to identify those peaks and sell into them instead of riding it all the way back down. When I talk about drawing support lines and waiting for them to hit, you can see here on Disney where I had drawn this support line back when it was trading at $185, $195. I drew this support line down around 85 bucks, and I waited till August, September of 2023 and finally bought Disney around that price. Disney declined 58% from its high to the point where I got in and bought it, a 58% decline. And now I think over the long term, it's going to be on a trend back up. The other one, Google here, had a 40% from its decline back in September, October of 2022. Looks like it was trading at about $153, dropped all the way below 90 bucks. And then that was a great support line to buy in for the next leg up. Just because something is coming down doesn't mean you abandon it. It means that you look for the new support so that you can ride the next wave up if you are confident that the company and the management has righted the ship and things are going to take off again. General rules for a CANSLIM selling checklist. And I put in white here and underline it for beginners, because if you are a more experienced trader, you might not need these such strict rules, but have a selling plan before you buy. Sell your losing stocks first. A lot of people tend to sell their winners and hold their losers forever. I don't want you to hold your losers forever. I want you to get in the habit of cutting bait and moving on. You're just wasting time. It's opportunity cost. Don't allow gains on your winners to turn into losses. Know when to sell. Avoid that ride back down when they peak. Here's the rule for the beginners. Begin taking profits when a stock increases 20 to 25% from a proper buy point. That doesn't necessarily mean the point that you bought in. What was the chart saying was the proper buy point? Another sell rule for beginners: always sell a stock if it drops 7 to 8% below what you paid for it. Just make that a rule if you're a beginner, and it will prevent you from holding things all the way into a very, very long decline. And finally, take defensive action if you see that a market downtrend is beginning to occur. Now, if you are an experienced trader, you're probably howling at the screen right now. What do you mean sell every stock 20 to 25% up and sell every loser when they drop 7 or 8% below what you paid for them? I just want to have you pause this and read what's on the screen. This is a strategy that I want beginners to consider. Why? Because if you are having problems with most of your portfolio being red, this is mathematically going to be a set of rules to help you stop that from happening. Basic math says that if you follow this set of rules, you can be wrong on 2 out of 3 stocks. And if one of them goes up 20 to 25% and you sell the other 2 at a 7 to 8% loss, you're still going to come out ahead, even though you had 2 bad picks. And don't forget, when a stock is declining and you sell and you get out, when it reaches a new level of support, if things have changed, then you can always re-enter that play. Sometimes our timing is just off. One major exception that we learn about in the CANSLIM system: if you are truly buying market leaders, if the stock runs up over 20% within 3 weeks of you buying it, go ahead and hang on to it and wait 8 weeks and see if that run extends. Sometimes the runs extend. You got in at the right time and you want to ride that all the way up. Sometimes they flatten out, sometimes they come down, but give it 8 weeks. If you get a big move in 3 weeks, and allow the play to develop, and then you can reanalyze it in 2 months. Again, this exception is not valid for every single stock that you buy. We are talking here about market leading stocks with strong fundamentals and superior earnings. Final general rule for the selling checklist is pay attention to the general market. Don't keep your nose to the grindstone on just one stock. Pay attention to the entire market. If the indexes are starting to decline, go over to investors.com and check that market direction. Statistical data shows that when there are 6 or more market distribution days, market down days in a row, that the market is likely headed into a steeper decline. So I want you to keep that 4 to 6 day number in mind, especially if you start getting around 6 days. Head on a swivel time. And if you decide to take that defensive action, make sure you're getting rid of your losing stocks first. The losers are going to be hurt worse in a market decline than your best stocks. So take action on the losers first. If you're a beginner, this might seem like a lot, and I want you to go buy the book because you're never going to get the full CANSLIM system from a 10-minute video. But if we could recap a couple of the things that we talked about here. Number 1, have a plan, have a strategy, have a system. Number 2, protect your capital at all costs. The most precious thing you have is the money in your account. And you can't get in the habit of watching a bunch of stocks drain your account. Have a plan for selling when a stock turns against you. Number 3, research. Read the financial statements. Read the fundamentals. Learn about the companies that you're investing in. Number 4, don't be afraid to take profits into run-ups. It doesn't mean that you need to sell the entire position, but as stocks are reaching the sell point, which hopefully you identified before you even went into the play, don't be afraid to start taking some profits. Remember, everything has a peak and they come back down. So you want to take profits into those peaks. And if you love the stock and it pulls back, you can buy back in. Number 5, don't hold on to losers. We don't need to say any more than that. And number 6, have a system for analyzing your plays a couple times a year, at least annually, and learn from your mistakes. If what you're doing is not working, be self-aware enough and be able to criticize yourself. What did I do wrong here? What could I do better? Why aren't I listening to Tony Denaro more often? This video has been a very high-level drive-by of this book, How to Make Money in Stocks by William J. O'Neill. I hope you buy the book. I hope you take the time to read it. And like I said at the beginning, even if only 10% of what is covered in this book sticks, it's going to make you a better investor for the long term. I hope that you guys got value out of this video. Thank you for sticking all the way here to the end. If you have questions or comments, please drop them down below. I love to hear from you guys. I am Tony Denaro, and I will see ya on the next video.